Hello, guys, and welcome to the show. Good morning, and I hope you're having a good day so far. Today is Thursday, June 28th, 2018. And I want to talk about Deutsche Bank for a second. Um, if we had a good, really good, strong, robust economy, and if all the numbers weren't fake, if the unemployment numbers really were down as low as they say they are, which is, it's all false accounting. It's all smoke and mirrors. We do have a little bit of an uptick in the economy in the last few months due to the, let's call it the Trump effect, you know. But the economy is certainly not vibrant. Deutsche Bank, if Deutsche Bank goes under, if we had a vibrant economy, we might be able to absorb the trauma that Deutsche Bank going down would create. But because our economy is the way it is, if Deutsche Bank goes down, it's going to be a Lehman moment. Now, Deutsche Bank is on the rocks toward the end of this show. I'm going to run through the different markets right now. And when I get done, I'm going to talk about Deutsche Bank a little bit more. So let's get the chart started right here. First thing we'll start on is silver. They're smashing silver again. We're looking at it flirting with the high $15 range, which is below the two ranges it's been in for the longest time. It's been in the around the 16.20 range and the 17.20 range. We're losing that. They're forcing it down, and they're actually starting to get it down into a new range in the 15s. I don't know what the new range will be. Could it be 15.20? Instead of 16.20, could they actually chop a whole dollar off of silver? I guess anything's possible. I don't know how much room they would have left between mining production costs at that point. I don't think they'd have much left at that point, but it would at that point, if they knock it down to 15.20 and they keep it there for any substantial period of time, mining production will start to slump. I kid you not. If they knock it down to 15.20, mining production is going to start slumping, and they're going to have much larger deficits every year. And that means when they have a deficit and they don't have enough silver to supply industrial demand from the miners, and they don't have enough silver from the mines to supply the world bar and coin demand, then they go into deficit. And when they go into deficit, they have to chew into the available silver that's up for sale. The amount that they have in storage, which is under 1 billion ounces, less than 1 billion ounces. And personally, I think it's only about 300 or 400 million ounces, if that. And they could easily slip into a 200 million ounce deficit just in 1 year. You know how that's going to chew in to the amount of available silver left for sale. Now, an awful lot of people get confused when they study silver, or even these guys that study silver, they get very confused. They think that the above ground silver supply is the amount of silver that's out there. In other words, that you can buy. That's not true. The above ground silver supply is the silver that is all over the earth everywhere, and it's a very large amount. It could be as big as 10 billion ounces of silver. But that silver, for the most part, is not available for sale. And the people that are holding that silver are holding it as an investment. And they're not going to sell it at $15.98 when a lot of them have paid that much or not more for it. And it's an investment. They're waiting until it goes up. So it's not available for sale. Now, the amount of a silver that's out there that's available for sale, most of that is being produced by the miners. And we get a big slide in the price like this right now. Those miners are going to basically, some of them actually are just going to say, hey, you know what? The prices are too low on silver right now. Slide that silver under the desk. If they're very small mining production, say they mostly mine copper and stuff, say they got 10,000 ounces of silver that they've mined, and they might hold it back from the market and wait for the price to go up a little bit and keep it as an investment for themselves. It has been done before. Anyway, let's take a look at the Bitcoin price here. At Bitstamp, 6104 is the price. and that price is just barely keeping its head above water from going down into the 5,000s. It has been for the last couple of days. Now, if we take a look at this chart, we'll see going back a couple of days for the last few days, we can see it's just been riding along this line right here, and it did have a dip where it went down to 57.80 and it made like a little bottom, but then it bounced back up again, and it's been kind of sliding back down again, back down toward the 6,000 mark or 5,900 mark over the past day or so. Now we're going to have to wait and see what it's going to do in the near future. I believe that it's in the process of making bottoms, so I believe it's going to make 2 more bottoms yet. Bottoms in price. How low those bottoms go, I'll give you a mark. I do not think the lowest bottom is going to go under 2,000. I don't think it will. I think it's going to stop and go. Actually, to tell you the truth, if it follows the last time that it did this, if it does exactly the same thing, the bottom is going to be 4,000. That's if it follows the last up and down pattern. It went up to 1150 and then it went down to that low. And if you take that low's percentage and weigh it against 1150, and then take the percentage of 2,000 and do the same percentages, you come up with a price, a low of $4,000 on Bitcoin. So we're getting down close to that low at 6,100. That's if it follows what it did last time. And if you continue to follow what it did last time, from going down from 200 all the way up to 21,000, if it does that again this time from a low of 4,000, it'll be over 300,000 by the time it reaches its peak. So there you go. You know, if it does what it did last time, now I'm not saying it will, but if it does do what it did last time, and of course it's capable of doing that because it's done it 9 times in the past, you could take a $4,000 investment and turn it into $300,000 if it does that. Now let's take a look at cryptocurrency market capitalizations. Bitcoin 42.5%. Market cap of 245 billion, and we're looking at mixed bag. We're looking at quite a few coins that are up a little bit. Monero's up big today, almost 5%. Wow, that's really something. Ethereum's up a little bit. Now, who's the big losers in these coins? There's no real big losers today. Bitcoin Cash is down 1.22%. That's a little bit at $696, so they're on sale. Bitcoin Cash. Litecoin is down a half a percent, $78.31. So Litecoin's on sale a little bit, and Bitcoin itself is down a half a percent. So it wouldn't matter if you bought Bitcoin or Litecoin; they're both down around the same percentage. Now the Dow Jones today, it's off 37 points right now, as we speak. It's getting down near, we'll see, it's been ever since February 8th. It's been riding this range, and now it's getting on the lower side of this range. Will it make a breakout to the downside? Or will we just have to wait and see? But I don't think it's going to make any breakouts to the downside until the bond market starts to roll over more. And I'm expecting that later this month. So let's go to the oil price. This is really looking spectacularly up. 72.82. It means going to be a higher price at the pumps. You're going to have to pay for your gas. Your fuel is going to cost a bit more. You're probably going to start to see it go up very soon. So this is sweet light crude at 72.78, and it's up 6 cents on the day. But this is quite a little spike upwards we've had in the last few days on this sweet light crude. It's went up from 64.38 all the way up to $72. That's quite a little climb. Percentage wise, that's quite a little climb. Now let's take a look at bonds and rates. Now all the bonds are starting to go up today, but we're not up substantially. We're only up a little bit so far, but across the board they're all on the uptick today, all the bonds. bond yields are up, but I'm expecting them to go up. I'm expecting them to continue to rise now, because we're almost to the end of the month. We're at the 28th of the month. All of the first 2 weeks of next month, in fact, all of next month, I'm expecting bond yields to pretty much rise very slowly. And I'm expecting the U.S. 10-year to go up to 3.15% before the end of the month. Now, we'll see if that's going to come true, but if the Fed is doing what they're saying they're doing, if they're not lying, then we should see the bond yield go up to that. Let's take a look at the U.S. dollar index. U.S. dollar index is 95.24, so she's riding pretty high right now. I've had a marker on it for 96, and it's getting up close to my marker. Now, I said 96 back when the U.S. dollar index was back around 80, I think it was 89 point something. I said I figure 96, and we're getting up close to that marker. So now we're going to take a look at Deutsche Bank today. Let me refresh the page. Deutsche Bank's fallen right now while we speak. It's 9.01. It's getting ready, I think, to go down into the 8s. Now, we're talking about euros. So we're at 9 euros right now. It just dropped another point. Deutsche Bank's in a mess. If we go here to, let's hone in on this chart closer so we can see a little bit better. And we're going to try going up. We'll go up to the 5 days. You see over the last 5 days, it's certainly not going up. Let's take a look at a month. It's been going down for a month. Let's take a look at a year. In the last year, we just see a steady slide, a steady decline. A few little bounces up here and there. There's a little bounce up right here. There's a little bounce up from here. But the overall, when we look at it overall, it's just a steady decline. Take a look at over the last 5 years. Same thing. Steady decline over the last 5 years. Now, at what point, all of a sudden, there, it's just dropped another point. At a certain point, all of a sudden, like, it's going to get down to a certain point, and then it's just the bottom's going to drop out from under it. That's the way it always works. At a certain point, investors and everybody just says, hey, this is over. This game is over. At a certain point. And that's when your Deutsche Bank is finished. It's over. Look, it's just dropped another point. I mean, all of a sudden, you could just see the bottom drop out of the whole. Okay, it made a point back. But the thing is at a certain point, it's not going to make points back. It's just going to keep sliding down to oblivion, and everybody's going to haul their horns out of it at a certain point. And she'll slide then to the bottom, rock bottom, and it'll crash, and it'll be a Lehman moment for the world if this thing crashes. And who's going to come in to save it? Is there any plans in the works right now to save German bank, the Deutsche Bank? Has Germany got a plan? Anybody got a plan? Because this thing's ready to fall to oblivion right now. And if they don't even have a plan in place already, if there's nothing going on, if everybody's just standing back watching this thing and this thing sinks and drowns, well, the world's going to go into chaos. And if everything else goes into chaos, the markets, even if they do come in with a plan for Deutsche Bank, the markets could all still be in chaos because everything's ready to go anyway. The housing, everything's in a bubble. There's housing bubbles. There's the whole thing. The whole thing. Needless to say, if you watch my channel, you know that we're in the everything bubble. Everything has been inflated, and everything's ready to crash, including the stock market, the bond market, and Deutsche Bank. If she throws all these things over the edge, and even then, if they come in with a rescue plan, well, everything else is going to be in chaos anyway at that point. So listen, thank you guys for listening to my show, and we will catch you again tomorrow. Bye-bye for now.